Hey guys, welcome back. So I'm going to be doing technical analysis on Bitcoin. As usual, doing a follow-up from my previous videos. By the way, I have been uploading free content on the website. I made a technical analysis for Ethereum, not yesterday, the day before. And I upload free content here that doesn't go on YouTube. So if you want to be notified of these videos, just subscribe to this Telegram channel here. This is free and open for anyone to join. If you're interested in other, technical analysis videos that I do during the week. So going back to Bitcoin here, remember my last update for Bitcoin here on YouTube, I said that we were dealing with the 50-week moving average here. Remember I said the week might close right here at the 50-week moving average and then start bouncing next week, which is the current week. I said next week referring to the current week when I made the video last week. So we still here. The price bounced for a little bit. It went as high as 7,500 and now it retraced all the way down and it's fighting with this moving average. What this is telling me is that it's trying to break it down. The more times a line is tested, this is true for support and resistance lines, trend lines, and also moving averages when they act as support or resistance. So we can see it's like knocking down, it's knocking. This is suggesting it will eventually break down. More probable than not. Of course, it's not 100% guaranteed. So if we go into smaller time frames, I'm going to go to the straight to the 4-hour chart here. Let's see. So we can see here it's clearly forming a continuation pattern, which I actually shared with members yesterday on Telegram. You can see it's doing lower highs and higher lows, and it's getting tight. The volume is decreasing as well, so it's low volatility, low volume, and it's tightening. You can call this tightening pattern or symmetric triangle or flag. Everything means continuation. So when you see continuation patterns like this, it means at 75% chance it'll break in the same direction that it comes from. In this case, down. It's coming, down, continuation pattern, down, 75% probability. And then, but then you always have the 25% probability it'll break in the upside. So here with the guys and girls in the premium group, we have been in this short position since here the entry was at 6,850. I anticipated, actually let me just zoom in a little bit more to the 1-hour candles. So I anticipated a free fall after breaking this previous low here. You can see that there's a low here, rally up, head and shoulders, break down, and as soon as we were breaking this previous low here, I anticipated a free fall. So I shared the signal to enter for a short position. I was calling for 6,000, but it did actually bounce again on the moving average, on that 50-week moving average. We don't see it here because this is the hourly chart, but this is the exact level of the moving average. I would think that the moving average would be, broken in the downside because it's been testing 1 time, 2 times, 3 times, always bouncing. So the more times it's tested, the weaker it becomes. So I anticipated this could actually break through the moving average, the 50-week moving average, and then the target would be 6,000. But it held and bounced again, and then we started forming this continuation pattern that you can see here. So we are still in this short position. We entered at 6,860. Initially the stop loss was a little bit higher, but now I would lower the stop loss to 7,000 more or less, because really if this continuation pattern breaks in the upside, that's all that you need to know, that's all that you need to see to close your position. It means you are wrong and it's not going down, it's going to have another rally. So I would close, I would have my stop loss I would say 7,000, just in case, you know, sometimes it just goes up and comes back down, creating a wick. So just in case this happens, I would have the stop loss at 7,000. It's a loss of 2%, so it's no big deal. If this is a losing trade, but there's 75% chance it'll break in the downside. So it's very, very small chance it'll break in the upside. So I would expect when this, if this breaks in the downside, as it's more probable and expected, this moving average, which is at this line, the 50-week moving average, which is at this line 6,600, where it says here take profit, I think it won't hold. It'll break straight through. So actually, if this if this pattern breaks now, I mean, maybe it'll break, by, you know, as I'm recording this video, but the immediate target down, the very first target is going to be like the length of this part of here of this triangle, and let's say it breaks out here, so the immediate target is going to be at around 6,300, as you can see here, 6,300, with more chance of continuation again. So it might, you know, make another little continuation pattern here, and then continuing downside. My target, it's still 6,000. It was 6,000 in this trade that this was my previous signal. Before this signal, I shared this signal. We've been, basically guys, we've been shorting all along the whole bear market. We've been shorting for the past 3 months. We've been getting it right every single time, except one time I had only one wrong call, which was here when we broke out of this channel. I was calling for a higher target up here. Of course, I never called for a reversal, but I was expecting a little bit of a higher target. I think I called for 13,000. But it reversed back down here. It was not able to break through, so we continued to short every time. So we've been shorting this bear market for the past 3 months, and we've been doing very, very well. And we're going to continue to assume continuation until it reverses. But if you assume continuation, you will be right 70-80% of the times. If you assume reversal before the reversal happens, you will be wrong 70-80% of the times. This is what's been happening with all the perma bulls out there on YouTube. They have been calling a reversal every time, and they have been wrong every time. If you assume reversals every time, you will be wrong 70-80% of the times. If you assume continuation, you will be right 70-80% of the times. So, you know, I'm going to continue to assume continuation until proven wrong. And then I'm fine being wrong one time, then I will change my assessment. But so far, continuation is the game. So let's see. Maybe this pattern will break in the next, I don't know, next from 1 to 3 hours, I would say, since I'm recording this video, before we see a clear break. I'm calling for a break in the downside because the chances, you know, the chance to break down is 75%, the chance to break up is 25%. So remember, if it breaks up, you don't need to ask in the comments what went wrong. You just need to know there is a 25% chance it breaks up. But you always want to play with the odds in your favor when trading. Guys, that's all that I have for the video of today. Thank you very much for watching, and I will see you soon. Bye.